Are you trying to build or rebuild your credit history? If yeah, then I have a great conversation for you today because what I'm going to do is I'm going to perform a comparative analysis of Kikoff, Self Credit Builder, Credit Strong, MoneyLion, Loqbox and Chime, and the results will surprise you. So stick around. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you are to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to do a compare and contrast between Kikoff, Self Credit Builder, Credit Strong, MoneyLion, Loqbox, and Chime. And nowadays, as of the date of today's conversation, those are the major players on the market when it comes to helping folks rebuild or build their credit. And one thing I want to say here is that the whole conversation revolves around two things: credit builder loans versus secured credit cards. And the big question is, which is best? Well, based on our analysis, they both are great pathways to becoming creditworthy borrowers. It depends on your situation. It depends on what works for you. Let me first explain quickly what we mean when we speak about credit builder loan. Now, a credit builder loan is a loan product that can help you build credit or rebuild credit and save money. And it doesn't quite work like a traditional loan though. So basically, instead of receiving the funds if you approved, the lender puts the loan amount into a savings account. So you'll make payments to the lender for, let's say, 6 to 24 months, depending on the loan term. And once the loan term is up, the full amount of the loan is disbursed to you. So think of it as a reverse loan, okay? And some lenders also return the interest that accrued while you were repaying the loan, especially credit unions. And each payment you make is reported to the three major credit bureaus to help you build or rebuild credit. So making every payment on time can help you prove yourself as a responsible borrower and increase your credit scores over time. And those loans, I'm talking here about the credit builder loans, they are offered by credit unions, community banks, online lenders, and lending circles. And the loans are usually available in increments of, let's say, 300 to 1,000. A secured credit card is exactly what it is. In other words, you deposit a certain amount of cash to the credit card issuer, and they will give you they will transform that deposit into your line. Okay, so if you deposit $500, your initial credit limit is $500. Now that means that as you use the money on the card, you still have to pay. You still have to pay the card issuer so that you can preserve your limit. And after 6 months or 9 months, you can graduate into an unsecured credit card, right? One thing I want to say here is that secured credit cards are also reported to the three major credit bureaus. So it's all about what works for you. At the end of the day, you need to understand the 5 elements that make up your credit score. So your payment history, your credit utilization. So payment history, 35% of your score. Your credit utilization accounts for 30% of your score. The length of credit history, 15% of your score. Your credit mix, 10%. And the new credit, that will account for 10% of your credit score. So it's kind of important to understand that. Now, one thing I want to say is that there are other ways to build and establish credit without a secure credit card or a credit builder loan. So what are those? First of all, you can become an authorized user. Okay, so you can ask a friend, a relative to if that person has good credit, you can ask them to add you as an authorized user to one of their accounts. So the positive payment history will be added to your credit report and will strengthen your score. Okay, and the cool thing here is that you're now responsible for charges made on the card, and your friend or relative can actually request that you are removed as an authorized user at any time. So this is pretty good because it allows you to benefit without taking too much risk. You can ask your landlord and service providers to report to the credit bureaus. Okay, nowadays it is very possible. Actually, you have Experian and Equifax, they offer this kind of services where you are able to report your utility bills and rent payment to the credit bureaus. So pretty good. You can also, if you want to, you want to quickly get the loan that you need, you can also look for a co-signer. Again, we're talking here about relying on a third party, relying on a friend or relative to help you actually build credit. So having a trusted friend or a family member add their name to your account could help you qualify for credit you otherwise wouldn't, right? So a co-signer can also help lower your interest rate and improve your terms. So those are things you need to think about. The person can either be a co-signer or a co-borrower. There are subtle differences here, but the bottom line here is that you have somebody on board to kind of help you if you want to build or rebuild your credit history. Before I get into the actual pros and cons and the review, please check out this short evaluation video. It talks to you about our approach, our proven methodology when it comes to reviewing, categorizing, and listing loans, personal loans and business loans on this show. Check this out. All right, let's first start with Kikoff. So when you think about Kikoff, what are the pros and cons here? Kikoff may help you build credit. There is no credit check required. So if you have a 375 FICO or a 300 FICO, doesn't matter. And there is no interest. So Kikoff does not charge you interest. And the cons here is that the credit line is capped at $500. And you can only use the money to shop in Kikoff store. So they actually just they're just giving you the cash and they're taking it back. Okay, and Kikoff is not available in all states. So the bottom line here is you have to be comfortable that whatever Kikoff is selling appeals to you and is part of your budget. Okay, so with Kikoff, the whole idea is that you can qualify for a $500 credit line that comes with no interest and a flat monthly fee. So that's how they make money. They make money by charging you a flat monthly fee. And Kikoff will report your payments to 2 of the major credit bureaus. Okay, and so if you make on-time payments, this can help you build up your credit. One thing you need to understand with Kikoff is that even though they're not charging you interest, you are paying a fee anyway. And the fee may range from $2 to $10 depending on your credit. But the credit line is capped at $500 and it's not available. It's only available in 45 states as of the date of this show. They don't operate for now in Delaware, Indiana, Nevada, Rhode Island, or South Dakota. So there are 5 states where they're not present. And one thing you also need to understand is that based on our research and interviews with people who have tried a Kikoff, it could take some time to show up on your credit. So people are saying it takes 6 weeks. Some have said it takes 8 weeks for the changes to show up on your credit report. Either way, that's pretty good. I mean, it's not a bad thing if you get a $200 credit line with them. It's unsecured anyway. They're not checking your credit. They're just giving it to you. As long as you can pay something you can use something in their store, then it's worth trying, right? And on top of that, there is no prepayment penalty. So if you decide to pay off your Kikoff line of credit early, you don't have to worry about fees. There is no penalty to pay off your balance in full. So this is pretty good. I mean, this is the best of both worlds, really. So a Kikoff loan is pretty good for folks who are trying to build or rebuild their credit history, and they don't need to borrow that much. You just want to show some pattern of responsible, credit-worthy borrower to go with Kikoff. Let me now review very quickly the self credit line. So self credit builder loan. Okay. Now, if you look in the thing with self is that they are a credit builder loan in the strictest sense of the word. In other words, you give them your money and then you have to pay them until a certain amount, and when you're done, they will give you your money back. Okay, so what are the pros and cons here? So this may help you build credit. It could help you save money also, because you actually you're actually saving money in the sense that you got a loan, right? But you didn't get the funds, but you're paying back, and you get the money at the end of the term, and you can close your account early, no problem with self. The cons here is that there is a non-refundable admin fee to set up the account, and there is a fee for paying off your account with a debit card. Okay, something you need to be aware of. And with self, the loans we're talking about 300 to 1,000. Okay, and they actually have they make it very flexible. That self will let you choose between 4 different monthly payment options: $25, $35, $48, or $150. It really depends upon your capabilities, financially speaking. And if you choose a loan term between 12 months and 24 months to pay off your loan, they will work with you to actually spread things so that you have an amount that can fit within your budget. And one thing we love with the stuff is that they give you 24 months, up to 24 months. That's pretty good, because that way you have peace of mind knowing that if you lose your job, God forbid something happens in the family, medical emergency, cash is tight, you can still survive and not lose your good credit with self by not paying them back. And it helps you build credit. You can save money, you can pay off or close the account early. And they do charge a non-refundable $9 administrative fee for setting up an account. Okay, and if you want to make your monthly loan payments with a debit card, you'll have to pay a 30 cents plus 2.99% convenience fee per transaction. Okay, so this is pretty good. And to be eligible, you must be at least 18 years of age and be a valid permanent U.S. resident or U.S. citizen to qualify. You got to have a good banking history. And self does not perform a hard inquiry on your credit, so applying will not hurt your credit scores. People always believe that self will hurt your credit score. No, they will not. And they aren't available nationwide. They are available in all 50 states. Unlike Kikoff, which is only available in 45 states, self is available in all 50 states. I want to quickly talk to you now about MoneyLion. When we speak about all the credit builder loans and all the, related products, MoneyLion is a good contender. So MoneyLion, the way I want you to think about it is that MoneyLion is really a financial services company, and they offer credit builder loans to their members without a credit check. Okay, and the interests are kind of reasonable; they're very low, but you have to pay a membership fee, which adds to, if you really think about it, it adds to the overall cost of the loan, right? So what are the pros and cons here with MoneyLion? They report payments to 3 major consumer credit bureaus: Equifax, TransUnion, and Experian. And there is no hard credit inquiry required. So this is pretty good. And the cons, you have a monthly membership fee, and they only offer small loan amounts. And the thing here is that the loan funds may go to a reserve account until you pay back the loan. So this is another drawback here. And one thing we love with MoneyLion is that they report your payments to the credit bureau. The credit bureau. So this is really good. This is really good. And but the membership fee can be kind of high, because you're looking at up to $19.99 per month. Okay, especially if you go with the upgraded Credit Builder Plus membership. So this is something that is it's a cost. You have to think about it. How important is your credit for you, or credit to you, right? So this is something you need to think about. But overall, MoneyLion is a basic credit builder loan, right? So you fund your account, so you apply, they give you $1,000, and based on the payments, the monthly payments, you don't get the cash. The cash is sitting in a reserve account, and you make payments for 12 months or 24 months, and then after that you get your cash back. And there is no prepayment penalty. And they do have something that we love that's called deferment support available. So if you need to postpone a payment for some reason, life happens, MoneyLion might allow you to defer a payment if you submit an application for deferment. This is really good. They give you room to breathe, right? That's how you call it, right? Room to breathe. And you also have, with MoneyLion, you have a free credit monitoring. And this is actually powered by TransUnion. And you do have some extra membership perks. Okay, this is really good. And to really qualify for this, you just have to have a social, be at least 18. You got to have a verifiable phone number. You got to have a verifiable bank account that's in good standing, right? At least 60 days old and has deposits that show steady income. That's what they want to see. And you have to put your full name, your full email address, your home address, and that should be pretty much it. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still talking today about, we're doing a comparative analysis of several credit builder loans and secure credit card options out there. And I've already spoken to you about the Self, MoneyLion, and Kikoff. Now I want to talk to you about Credit Strong. And Credit Strong is a great player also. Now Credit Strong is they offer a credit builder loan. So again, it's the same thing here. They advance you some cash, and you basically repay. You make monthly payments until a certain amount, until a certain date has passed, and then you get your money back. And Credit Strong is one of the few legit companies in that space because they are a finance technology or fintech division of a bank called Austin Capital Bank, and this bank is FDIC insured. Okay, not a problem. It is a community bank that was founded in 2006. Okay, and the thing here is that the bank serves communities in Texas and has been highly rated as one of the fastest growing, top performing banking institutions in Texas. So it is a legit company. So even though the bank serves the greater Texas community with its banking services, Credit Strong operates all across the country in every state beside Vermont, Wisconsin, and North Carolina. So they operate in 47 states. Only those 3 are missing right now in their roster because they haven't gotten the license yet. There are other issues going on, but as you know, banking is a state affair. So they just right now they don't operate in Vermont, Wisconsin, and North Carolina. So it is, again, Credit Strong is a great credit builder loan, and we love the fact that, and here are the pros and cons. They do provide a free FICO score every month. They can help you build a long payment history. There is no credit check. There are no termination fees, and it is secure. Okay, very secure, because many fintech apps that provide services like loans and online banking do not have the support of established financial institutions like banks. Okay, and if you really think about it, this could be risky, right? Because this can make putting your money with those fintech companies slightly risky, because there is a risk you could lose all of your cash. And with Credit Strong, things are different because they are backed by a bank, and this bank is FDIC insured, so you know that your money is safe. What about the cons here? They don't have large loan amounts. Okay. And they're not a loan solution. This is a solution to help you build credit score. It is expensive, and the savings are locked up. And we love the fact that when you get this, the Credit Strong solution is kind of cool, but we don't like the fact that they have accrued interest. So you don't have accrued interest on your savings. So this is something that you have to be thinking about. In terms of fees, they're pretty reasonable, and their initial pricing starts at $15 per month and expands all the way to $110 per month, and you can customize your payment terms up to 120 months. All right, something that you have to think about. Number 5, folks, let's talk about Chime. Now, we have reviewed Chime on other shows, but what I wanted to see today is that Chime is another great player. And they actually have a card. They don't have an account. They have a card, a credit card. It's not really a credit card. It's more of a secured or / debit card, but they call it the Chime Credit Builder Card. And it is a very easy to use, virtually fee-free, secure charge card designed to help you build credit or rebuild credit. Okay, and the thing is that here are the pros and cons. With this Chime Credit Builder Card, you have lack of fees. This is really good, right? No credit check required. It's a relatively safe way to build credit or rebuild credit for that matter. And they report to the 3 credit bureaus, Experian, Equifax, and TransUnion. And there are some drawbacks, of course, and some of the drawbacks include the fact that you can't carry a balance. They don't offer rewards or a welcome bonus, and you need to use this in conjunction with the Chime spending account. In other words, one thing you don't probably know is that Chime has also a banking operation, okay? And they want you to open an account. They want you to open a checking account and link your Chime credit card or your Chime, secure card to that checking account. So this is something you need to be aware of. And one thing I want to say here is that overall, this is a solid offer. This is a solid offer and you can build credit history. You can build your credit very fast with Chime. And the company is legit. It is a solid player. They do have a strong customer experience. They have a vast collection of resources for borrowers, especially those borrowers who have a need to rebuild or build their credit history. They help you, and we love the technology they put to use here. Their borrowers can benefit from a clean interface when it comes to the mobile experience. They can access the customer service rep Monday through Friday, or 7 a.m. to 9 p.m. Central on Saturday and Sunday. And Monday through Friday is 6 a.m. to 10 p.m. Central. All right. And you can also contact them by email. If that's what you want, you can actually contact them also on their website. So this is so you have a large constellation of outlets whereby you can reach Chime customer service. I want to talk to you now about Loqbox. Last but not the least. So when you think about Loqbox, what do you think about? You want to think about three things. Here is a solution that helps you save, build, and unlock. What they call save, build, and unlock, the SBU. So saving means what? Saving means that you decide how much you can save into your Loqbox each month for a year, and they will finance the full amount with a 0% APR loan. And then they have the build. So you build your savings and your credit score by making on-time payments each month. And they report these payments to the major credit bureaus, the three of them. And then you unlock. So once you have made your final payments, you transfer the savings from your Loqbox into a new savings account for free, or withdraw into your own account for $40. Okay. Now remember that this is a credit builder loan. Really, it's nothing new here. It's all about the fact that this is the player here are different. So Loqbox really is a fintech company. Okay, so the thing here is that they're giving you the option to decide how much you can save into your Loqbox each month for a year. Okay, and so basically you put in the money there, so you're making the payments. Let's say you're just making so instead of, let's say you have $1,000 to save, right? Instead of putting this in a savings account, you put the money in a Loqbox account. Every month you put in there $50. The funds are locked, of course, and basically they're reporting this as payments to a credit bureau, to the three credit bureaus. So after making monthly payments for a year, your loan is repaid and you leave Loqbox and with an improved credit score and your money back into a new account for free. So this is kind of similar to a credit builder loan, actually. One thing I want to say here is that Loqbox is not a loan technically, because technically it is a cash redeemable savings voucher, but you use a 0% APR loan provided by the company's sister finance company, Loqbox Finance US LLC, to buy the voucher. So the finance is transferred from a Loqbox Finance LLC, okay, to Loqbox on your behalf when you buy your Loqbox, aka the voucher, using the 0% APR loan from Loqbox Finance LLC. Now, the bottom line here is that the whole thing can sound a little convoluted, but it is pretty simple. If you go to their website or if you call them up, they'll explain it to you. And you have hundreds of thousands of people that are using this payment system. The bottom line again here is that Loqbox is designed to work over a series of 12 monthly payments, and all you have to do, just make all 12, and you should see an increase in your credit scores. Okay, this is the bottom line here. All right, folks. So we have compared analytically all those 6 players, right? Kikoff, Self, Credit Strong, MoneyLion. We have Chime and Loqbox. And the big question is, which one should you choose? Which one should you choose? It really depends on your situation. At the end of the day, you got to think about, do you want a secured, because in all the 6 players that I explained to you, only one is a secured card. Chime is a secured card. Even though they call it the credit builder card, it is a secured card. It is a charge card. In other words, you're not carrying any balance. You're paying everything in full. The other 5 are credit builder loans. So at the end of the day, it's all about what works for you. If you need discipline, if you need something that drives you to increase your score, I would say go with a credit builder loan. And in our view, all the choices here are kind of cool because they all help you build credit. No credit check is required, so there is no hard pull on your account. There is no interest charged, right? Of course, you have to pay a fee, all right? And that's for the pros. And the cons in general revolve around the credit limits that is capped. You can only you can only withdraw. I mean, you cannot withdraw, but you can only pay every month and hope for 12 months to get your money back, or 24 months. If you think Kikoff, for example, it's pretty interesting because Kikoff gives you the money, but you can only use the cash in their store. So to decide whether or not Kikoff, for example, works for you, you got to ask yourself whether or not the kind of items they sell in their stores appeal to you. Are those items part of your budgetary baskets every month? Do you buy those items, or this is just something that you just you purchase occasionally? So if you only buy this sporadically, then it's not really interesting to get Kikoff because you're just going to waste a lot of money buying stuff that you don't use, that you may not need, or unless you have people whom you can donate this to. Okay, so this is the kind of analytical journey I want you to have when it comes to choosing the solution that works for you. You also have to think about the fees. What I gave you all the fees. Some charge more than others. Some charge you a membership fee. Some charge you something else. So you got to ask yourself what really works for you. What really works for you at the end of the day. And this is the kind of conversation you need to have. And for everybody, it's different. Okay. Of course, I will give you our preference based on our analysis, and we have analyzed tens, if not hundreds, of players out there, of lenders out there. But your situation might be different. All right, folks. Our pick in today's conversation is Self. We believe Self offers a wider constellation of products and services that revolve around building or rebuilding credit. Kikoff is a little restrictive. You got to buy stuff in their store. If you don't like what's in the store, you just kind of feel stuck. So we love Self. So the next is Kikoff. Great player, by the way, 9.5 over 10. Self, 10 over 10. Kikoff, 9.5 over 10. Credit Strong, 9.5 over 10. Chime, 9 over 10. Loqbox, 8.5 over 10. And MoneyLion, 8.5 over 10. I think Loqbox, if I were to give you a little piece of advice, you want to simplify your business model. Because right now, I mean, people understand, but it takes a little bit of explanation to understand exactly what you offer. So you want to simplify that business model. Thank you so much for your attention, folks. I really appreciate it. I'll speak to you another time. But until then, remember, stay marvelous.